Okay, hello students. We are in the next numerical of mergers and acquisition. In this, balance sheet of A Limited as on 31st March 2017 is given. So generally it will be a balance sheet of target company. Okay, in this, liabilities are given, assets are given. Okay, in assets, take a note, P&L account is written on the asset side. That means the company might have gone under losses of 20,000. Okay, so this will change the opening entries of A Limited. Okay, in the following problem. And additional information is also given. As on above date, A Limited was absorbed by B Limited on the following conditions. Okay, in this, equity share of A Limited to get 3 equity shares of B Limited of rupees 10 each at 15% at rupees 15 per share, for every 5 shares held, and a cash payment of rupees 2 per share. Okay, that means equity shareholders of A Limited, which is the target company. So those shareholders of target company to get 3 equity shares of B Limited. So B Limited is offering them 3 equity shares, okay, at a premium again of 15 per share for every 5 shares held. That means for every 5 shares of A Limited, okay, they will get 3 shares of B Limited. Okay, in this case. Okay, so yeah, and along with that, okay, so for example, if the shareholders of A Limited, the target company, is having 10 shares, one shareholder is having 10 shares with him, then in return of those 10 shares, he will get 3 plus 3, 6 shares he will get of the new company, which is B Limited. Okay, so and so on. So and along with that shares, he will also get a cash payment of rupees 2 per share. So for every 1 share he's holding in the target company, he will get 2 rupees per share. And second point says preference shareholders. Okay, here we have preference share capital, which is a new thing. Okay, nothing, the treatment is very similar to equity shareholders and debenture holder, which we have seen in the previous problems. Okay, so preference shareholder to be allotted with new preference shares in B Limited to the extent of 90,000 in full settlement. Okay, so it is a straightforward settlement. Preference share capital is 1 lakh. Okay, instead of 1 lakh, they'll be giving 90,000 to all the preference shareholders in full settlement. So there is no much calculation needed here. Third is debenture holder to get 10% debenture in B Limited to the full extent. Okay, so not much calculation even here. Okay, next information it tells us that B Limited agreed to take all the liabilities and assets of A Limited. Expenses came to around 2000 and was met by B Limited. Okay, it is similar to previous problem. Okay, so 2000 was the additional expense by the target company, which will be paid by the acquiring company. Okay, and finally it tells us to prepare ledger accounts in the book of A Limited and opening entries in B Limited. Okay, we'll also, yeah, so we'll also do in both the things here, opening entries in the acquiring company and the closing entries in the target company. Okay, so first thing, with the solution, computation of purchase consideration. This is the first thing in this kind of a problem you will be calculating, purchase consideration. So what is purchase consideration? Is the amount which has been given by the acquiring company to the target company, an amount which has been spent, okay, basically to the given to the shareholders. Okay, it can be equity shareholders or preference shareholders. In this case, both are there. So to equity shareholders, 15,000 into 3 by 5 into 15. How we got this? See, 15,000 is the number of equity shareholders in that company, equity shares, which is of 10 rupees each, and 1,50,000 is the total share capital. So 15,000 shares are there in this. For those 15,000 shares, they are offering 3 equity shares in exchange of 5 shares. Okay, so they will give 5 shares. The target company shareholders will give 5 shares, and the acquiring company will give 3 shares. So for every 5 shares, they'll be getting 3 shares in the acquiring company. So, and at a premium of 15 rupees per share. Okay, so this is how we got here. 15,000 total number of shares, 3 shares they'll be getting of B Limited company, acquiring company, and in return of every 5 shares in the target company multiplied by the rate 15. So 1,35,000 is will be given to the equity shareholders, not the amount but the expense is 1,35,000 for the equity shareholders of the target company. And also it said cash was given 2 rupees for every 1 share. So we have 15,000 shares into 2 rupees per share, 30,000. And so and for the preference shareholders it was said lump sum amount of 90,000. So no calculation here. Okay, 90,000 in full settlement. Okay, so 90,000 will be given to the preference shareholders and the total consideration will be 2,55,000 here. Okay, so this is the purchase consideration we have found out. Next we will start preparing the realization accounts. Okay, don't bother about this. Okay, it will be debit and credit here. Okay, so all the assets will come here, liabilities will come here. Okay, so we'll see what are the assets. Fixed assets will go there, debtors, stock, and bank. P&L account, preliminary expenses and underwriting expenses. So these are not the real assets, they will not come in the realization account here. Okay, so these are there, fixed assets, debtors, stock and to bank. Okay, so this is the balancing figure we'll see. And the credit side we have all the liabilities. Okay, excluding this and this. So this is the share capitals. So excluding this we have debentures and creditors. So we have got debentures and creditors, and with this purchase consideration of 2,55,000 and by preference shareholders discount. Okay, in this we have given preference shareholders 90,000 but it was earlier 1 lakhs. So 10,000 remaining we will be writing it down here. Okay, so that is the preference shareholders are being discounted 10,000, and so the balancing amount which has been profit, so it has been written here. Okay, this minus this should come 65,000. Okay, so this is the final realization account, and we will be keep on making different accounts here. Equity shares in B Limited to realization account, how this has been split by equity shareholders 1,35,000, preference 90, preference shares 90,000, by cash 30,000. So we have got from here. Then cash account will prepare 30,000 from to B Limited to the equity shares who will be receiving this 30,000. Then finally then equity shareholders account. In this see, P&L, preliminary and underwriting, this has come here. In the previous problems, okay, preliminary and underwriting were not there, but in previous problems P&L account used to come here as it was a profit. Here in this case the company has suffered a loss of 20,000, so P&L account is being written down here. So P&L account, so loss here, profit here. Okay, P&L account, preliminary and underwriting, whatever expenses are there, it has been written here, and what has been given to the shareholders, the cash, the shares and the cash. Okay, and this is balanced by equity shareholders 1,50,000, equity share capital, sorry, 1,50,000, which was there in the problem, 1,50,000, and the remaining balancing figure 65,000. Okay, we have tallied from here 65,000. So even here the balancing figure 65,000. So we are good. Next is preference shares in B to B Limited account 90,000 to preference shareholders account 90,000. Preference shareholders account, in this preference shares we have settled in lump sum of 90,000. We have given it we have taken a discount of 10,000 here. So preference shares 1 lakh and here 90 and 10. Okay, so this was all the accounts. Now we'll do the opening entries in the B Limited company, opening entries in the acquiring company. So it is similar to the previous problem. Okay, first is business purchase, the total consideration amount, purchase consideration amount 2,55,000. From here we have got. Okay, then 2,55,000 to 2,55,000 liquidator of A Limited. Then second is again there is no revaluation here, so whatever the fixed assets amount is there in this, the assets, the same thing will be writing it down there. So 2,25,000 this and this. Okay, again this will be the balancing amount, goodwill. Okay, so okay, will not see this. Then 12% debentures, creditors, and the business purchase amount has been written, and then the balancing amount has been calculated as goodwill. Okay, so this was the third one being assets and liabilities have been transferred. Okay, next is the liquidator of A, 2,55,000, how it has been distributed properly. Okay, so in this 15,000, if you remember, while calculating this, we have done 15,000 into 3 by 5 into 15, which was premium. So it's just been split here with as 10 and 5. 5 is the premium, 10 is the per share actual price. So 15,000 into 3 by 5 into 10, which is 90,000, and to share premium of 5, 45,000, and to cash and a preference capital, which was lump sum. So this is how the purchase consideration is being paid. And then next is about goodwill account, 2,000. How we got here 2,000? It has been said here, agreed to take up all the liabilities and assets, and expenses came to 2,000 and was met by B Limited. So B Limited took care of all the expenses. So that has been also added to the goodwill. And next is about 12% debentures account. Okay, debentures 50,000, it was paid in full, so no calculation at all. And it was mentioned in the third point. Okay, a debenture holder to get 10% debenture and B to the full extent. The debenture amount has been, interest amount has been reduced, but they'll be getting full payment of 50,000. Okay, so there is being a 12% debenture conversion to 10% debentures. So 50,000 has been done. So this is done of the opening entries of the acquiring company. Now we'll come to the journal entries of A Limited. That means closing entries of a target company. Yeah. So first is equity share capital debited to this much to equity shareholders. Just equity shareholders has been transferred. Equity share capital has been transferred. Next is same preference capital. Third is debentures 50,000, debentures creditors 25,000 to realization account 75,000. Then realization account debited to this much by these assets. Okay, this was fourth, and this is equity shareholder 50,000. It has been to P&L account this much preliminary and underwriting expenses. Okay, then sixth one, B Limited 2,55,000 to realization account 2,55,000. Okay, so the purchase consideration which is there. Then equity shares in B Limited 1,35,000 cash this much, this much. This is the split up of purchase consideration to B Limited account 2,55,000. Then equity shareholder debited 1 lakh to equity shareholders in B Limited. So this is the new shares which the shareholders will be getting. New shareholders of B Limited will be getting 1,35,000. Similarly, we'll do it in cash. We'll do it for cash. We'll do it for preference shareholders, and we'll use the discount which has been given for the preference shareholders. Instead of 1 lakh, we are giving 90,000 to them. Okay, and finally realization account 65,000. This is which was the balancing amount. Okay, so we have just used the journal entries. We have got those journal entries from all these accounts till here. Okay, we have just written it down, so it's a reverse thing. Okay, so that's it. Thank you.